15.3 talks about the balance sheet. The balance sheet describes the financial condition of a firm at one point in time. So the balance sheet will include the assets. The assets is the value of the total of everything that's owned by a business. It would include property, equipment, money, cash, securities, etc. The balance sheet also shows what's referred to as liabilities, and liabilities are amounts that are owed to others. Debts, okay? So assets are, things that the company has that have value. Liabilities is what is owed. Both assets and liabilities are divided up into two categories. So within assets and within liabilities, you will see long-term and current or short-term. And so specifically when we're looking at assets, you have current assets. You can read the list here, but they include cash, accounts receivable, notes receivable, inventory. And for property, plant, and equipment, which would be considered non-current or long-term assets. And that would include land, buildings, and equipment. For liabilities, current liabilities will be examples like accounts payable, notes payable that's due within a year, okay, anything that's going to be due within 1 year. And then long-term liabilities examples would be like a mortgage payable and long-term notes. So if you bought a car and you paid over 5 years, that would be considered to be long-term. Now, the difference between your assets and your liabilities is going to be referred to as owner's equity. And again, the textbook refers to it as net worth. So when we prepare a balance sheet, you'll see that the balance sheet is going to list assets, liabilities, and equity. And then within the assets, you'll break it down between current and non-current or other assets. And then within liabilities, you'll break down between current liabilities and other liabilities or long-term liabilities. And then you have your stockholders' equity section at the bottom. So let's take a look on September 30th. One formula you do want to remember is that the formula is the stockholders' equity would be equal to total assets minus total liabilities. So really we're just talking about plugging in numbers in specific areas. Should be pretty straightforward, just as long as you remember where dollar amounts go, how to total them up, and then ultimately we'll go through this. So current assets include cash and short-term equivalents. You'll plug in that dollar amount. Accounts receivable and other, you'll plug in that dollar amount. Inventory and other, you'll plug in that dollar amount. And then you can sum this all up so that you have total current assets. You then have other assets, which include net plant property. You'll plug in that dollar. These will likely be given to you. Other assets listed there, you'll sum that up. And then when you sum this total, when you come up with total assets, you're going to add total current assets plus other assets, so that this 321,686 really means this plus that. Current liabilities, you're going to be given these numbers, you plug them in, you'll get a total current liabilities. Other liabilities would include long-term debt, you plug in those numbers, and then you'll end up with total liabilities, which includes the current. So this plus that equals total liabilities 193,437. And then to compute stockholders' equity, we're simply going to get total assets minus total liabilities. Total assets 321,686, plug that in your calculator, minus total liabilities of 193,437 will give you 128,249. And now to confirm everything, we'll go ahead and add total liabilities plus total stockholders' equity, this plus this, and that'll give us 321,686. And based upon the formula, the logic of the formula, these two dollar amounts should be equal.